Running a small business or a startup is exhilarating, but it's also a path paved with tough decisions, bold moves, and sometimes, unexpected risks. Among the many financial and operational considerations, one question often lingers in the background for business leaders and financial managers alike. Do we need directors and officers, D&O, insurance? And what exactly does it cover? Whether you're scaling a promising startup or steering an established enterprise, understanding the value and coverage of D&O insurance could be critical to safeguarding your company, its leadership, and its future. This guide will break down what D&O insurance is, why it matters, and when it might be worth considering for your business. What is D&O insurance? Directors and officers, D&O insurance is a specialized policy designed to protect the personal assets of a company's executives and board members in the event they are sued for actions or decisions taken in their corporate roles. These lawsuits can arise from a variety of claims, such as 1. Breach of fiduciary duty. 2. Misuse of company funds. 3. Failure to comply with regulations. 4. Misrepresentation of financial health to investors. Without D&O insurance, your directors and officers could be personally liable for legal defense costs, settlements, or judgments, potentially putting their assets at risk. This coverage provides a financial safety net, enabling your leadership team to make bold, strategic choices without fear of personal financial ruin. Why small businesses should care about D&O insurance. It's easy to dismiss D&O insurance as a concern for large, publicly traded corporations. However, today's legal landscape increasingly shows that even small businesses, startups, and nonprofits are not immune to litigation. Here's why. 1. Small businesses face similar risks. Though your company may not operate on Wall Street, its executives and decision makers still hold fiduciary responsibility to stakeholders, whether it's investors, employees, or partners. Claims of mismanagement, regulatory infractions, or employee disputes can lead to lawsuits regardless of company size. 2. The financial impact of litigation. Legal issues are costly and time-consuming. A single claim can lead to thousands, or even millions, of dollars in legal expenses, which might otherwise threaten the financial viability of smaller businesses. For example, without D&O insurance, your company's resources might have to cover legal fees, instead of being allocated toward growth or operational needs. 3. Meeting investor and partner expectations. If you're a startup seeking investment or partnerships, D&O insurance may help enhance your credibility. It reassures stakeholders that your company takes risk management seriously and that decision makers are protected against potential liabilities. Key benefits of D&O insurance. Not convinced yet? Here's a closer look at the distinct advantages D&O insurance offers small businesses and startups. 1. Attract and retain top talent. Your company's leadership team likely wants assurance that their financial well-being won't be jeopardized by lawsuits. Offering D&O insurance as part of your risk management strategy signals to potential board members and executives that their personal assets will be protected. 2. Protection against a range of risks from regulatory challenges to employee allegations of wrongful termination. D&O insurance can cover a wide spectrum of risks that aren't included in general liability or errors and omissions (E&O) policies. This allows your business to manage complex claims more efficiently. 3. Peace of mind for decision makers. Knowing that a safety net is in place allows your directors and officers to focus on their strategic responsibilities, without undue worry about personal liability. 4. Ensures continuity of business operations. When faced with legal claims, financial support from a D&O policy can help minimize disruption to your day-to-day operations. Your business can prioritize customers, operations, and growth rather than being bogged down by court proceedings. When should you consider D&O insurance? While every business is unique, here are some scenarios in which having D&O insurance might be especially relevant. 1. You're seeking investment. Venture capitalists, angel investors, or other backers are more likely to support startups that shield their executive team from lawsuits. 1. You have a diverse board of directors. A highly skilled, experienced board member might ask for D&O coverage before agreeing to join your team. 2. You work in a regulated industry. Businesses in heavily regulated sectors like healthcare, finance, or tech often face higher levels of scrutiny, and a higher likelihood of legal action. 3. Your company is growing quickly. Rapid growth can introduce risk and increase the potential for operational missteps, making comprehensive protection crucial. 4. You're entering into contracts with partners. Some contracts with vendors or business partners may even require proof of D&O insurance before relationships are formalized. What does D&O insurance typically cover? While the specifics of coverage will depend on the policy, D&O insurance generally covers 1. Legal defense costs in lawsuits against directors or officers. 2. Settlements or judgments from litigation. 3. Wrongful acts allegations, including negligence or breach of duty. 4. Regulatory or government actions, such as investigations or non-compliance penalties. 5. Shareholder or investor disputes, including claims of misrepresentation. However, it's important to note that policies typically don't cover intentional dishonesty or illegal activity. How to choose the right D&O insurance for your business. When exploring D&O insurance options, keep the following considerations in mind. 1. Assess your risk profile. Understand the specific liabilities associated with your industry, business size, and leadership team. This will help you identify the coverage limits and policy features you need. 2. Choose a reputable provider. Work with an insurance provider that has strong experience in D&O policies. At SD Meyer & Associates, our team can guide you through the process of identifying the best coverage options tailored to your business. 3. Review policy exclusions carefully. Ensure you fully understand what your policy does and doesn't cover. Every business is different, so customize your policy to align with your unique needs. 4. Seek expert advice. Having a financial advisor review potential policies alongside you can help you avoid common pitfalls when selecting insurance. Our experts are here to help demystify the process. Final thoughts: is D&O insurance right for your business? Directors and officers insurance isn't just a luxury for massive enterprises, it's a smart investment in protecting your company's leadership and financial stability. For small businesses, startups, and organizations navigating increasing complexities in today's business environment, D&O insurance offers peace of mind and protection that's tough to ignore. Still wondering how D&O insurance fits into your broader risk management or business strategy? Reach out to SD Meyer & Associates today. Our team excels at crafting customized insurance solutions to help you safeguard your company's future.